including GHG accounting, climate risk assessment, Paris Agreement alignment, and climate strategy. Offering trainings on climate risk assessment, climate strategies, and adaptation. Supporting events and partnerships to the international agenda. Mobilizing resources and facilitating joint business opportunities and project proposal. IDFC Climate Facility. Let's work together to implement the Sustainable Development Goals towards 2030.
Good afternoon, everyone. Thank you for your patience while we get this started. My name is Nicole Pinko. I'm with the Climate Policy Initiative. We're an analysis and advisory firm focused on figuring out where climate finance is coming from, where it's going to, and how it can be used most effectively. In this project, we've actually been joined by E3G and my colleague Laura, who will be presenting the second half of this presentation. So I just want to say thank you to our audience and to the wonderful panel members for coming for this discussion. So very much appreciated. All right, so, there we are, all right. So this panel is really looking at ways that we can enhance the cooperation between multilateral development banks and national development banks, particularly when it comes to understanding climate flows related to on-lending, as well as the ways in which differences in Paris alignment approaches can impact both that on-lending and kind of just the symbiotic relationship between multilateral development banks and national development banks. So we have, within the context of this conversation, we really started out looking at, what is the relationship of MDBs and NDBs on lending within this financial architecture reform. So, what is the need for public financial institutions to work better together as a system to really increase the effectiveness and volume of climate finance? And we've broken that question into two separate issues that jointly impact the MDB-NDB relationship. The first is, what are the state of climate finance flows between multilateral development banks and national development banks? We found that these really are not comprehensively documented, they're difficult to collect, and the data is really incomplete. The second question is looking at the pathways to align financing with the Paris Agreement goals between national development banks and multilateral development banks, and how those are affected by key differences such as geography, mandate, and capacity. So looking at these two issues together, we're really trying to better understand how these two aspects really impact the relationship and how we can optimize that relationship between multilateral development banks and national development banks. So in terms of our methodology, we really wanted to kind of take a joint view of this. So CPI undertook a web scraping exercise of multilateral development bank project portals from 2015 to 2022 to identify a sample of climate-related MDBs to NDBs financial flows across emerging markets and developing economies. And only the 10 MDBs that report to the Joint Climate Finance Framework are included in this as an FYI. On the qualitative side, E3G undertook an assessment of Paris alignment progress of the 6 MDBs and 6 national development banks across 5 dimensions based on the E3G public bank climate tracker. We also tried to illustrate this work with 3 case studies of MDB-NDB on-lending projects. And we also took on a variety of interviews with public development banks. We had a Financing Common Summit roundtable, and we also have accepted feedback from the key MDBs and NDBs included in the study. And then lastly, we undertook a literature review, which really found that there was not a lot of existing literature in this space. So, with that said, we undertook this web scraping activity to paint a clearer picture of what the climate on-lending flows from MDBs to NDBs look like. And I just want to pause for a moment to highlight the last point on that slide. Due to the imperfect nature of web scraping, AI, and just the occasional sparsity of public data, we do recognize that this is an underrepresentation of total MDB to NDB climate finance flows. And I also want to highlight that IDB was in touch with us this morning to let us know that we may be omitting a number of those projects as well. So we're actually going to go back and look at that. Any changes to the numbers will be reflected in an updated report later this week. For our current findings, though, we found that there are 42 climate-related transactions between MDBs and national development banks in emerging markets and developing economies, totaling $5.5 billion. In 39 of these cases, the National Development Bank is the recipient of the financing or the technical assistance, while the remainder are co-financed. The the majority of transactions are also aimed at general green investment, and you can see that with that very large cross-sectoral aspect on the right-hand side. And then looking at the next slide in terms of our analysis and our findings, 84% of these climate finance relationships are received by national development banks with a flexible or infrastructure-focused mandate. So, we had a couple that were received by local governments, Ex-Im banks, agriculture, MSME banks, but the vast majority are these flexible or infrastructure-focused mandates. 33 of the 39 transactions were also in the form of debt agreements, mostly loans and credit lines, and were also offered in hard currencies, so USD and euros. We also found that most of these, or not most, but a wide variety of these, included a sovereign guarantee requirement from the national government, which adds in an extra political consideration. And that we also found 4 standalone technical assistance arrangements. And this is actually a key category that we know that we're underrepresenting, simply because a lot of these are not categorized similarly as projects and are not so clearly available in terms of who the parties are and what the financial flows are. So we also have 3 case studies that really wanted to highlight best case scenario with this on-lending. The first is for a local currency facility with climate objectives. And in this case, the New Development Bank financed the Industrial Development Corporation of Southern Africa Limited and provided 1.5 billion South African rand to help build a renewable energy sector development project, with the idea that the sub-projects funded are across solar, biomass, and energy, and in line with the South African national plans. The second is an MDB guarantee to secure the National Development Bank with private sector financing, and this is illustrated by the Sao Paulo Metro Line 6 project, a loan provided by BNDES for a public-private partnership, received guarantee support from CAF, and it involves the construction, operation, and maintenance of the subway line. The last is on a multilateral development bank to national development bank technical assistance integration for financial instruments, and this is really illustrated by the Indonesia 1 Green Finance Facility. So in this case, USD 150 million was provided from ADB to PTSMI, who is the secretariat and manages the SIO GFF. So looking at kind of these 3 ways in which we can illustrate that there have been a number of successful on-lending instruments and operations. So we also, along with the successful instruments and operations, we also wanted to look at areas where it wasn't working. What are the barriers to greater investment here? And what are the potential obstacles to, increasing and scaling up this on-lending? So the first is currency risk. There is increasingly a lack of local currency financing, which does expose national development banks to sovereign risks and currency exchange risks. This is actually something that most of the multilateral development banks are really well aware of and are working currently to try to figure out ways to address, but it's an extremely complicated issue. The second is general risk appetite. So the idea that MDBs, looking to mitigate risks, but the national development banks need more competitive financing to effectively invest in climate projects. And the last is around institutional capacity and expertise. So a lot of the advanced multilateral development bank criteria for project preparation and bankability really limit the MDB project pipeline. There's also a lack of viability of secondary finance allocation that makes it hard to evaluate climate impacts, including the traceability of those MDB funds to their ultimate climate projects. And then lastly, the stringent MDB reporting requirements may be difficult for national development banks to meet due to a lack of capacity in climate data, as well as conflicts with whatever national requirements and disclosure regimes are in place. So, I will hand over to Laura to do the next section.
Thank you so much, Nicole. And for those of you who don't know me, my name is Laura Sabogal, and I'm a senior policy advisor at E3G. And I'm very happy to be here to discuss a topic that Nicole and I and the rest of the banks that we work jointly with have been discussing increasingly about the need of how to optimize the relationship between MDBs and NDBs. And to do so, as Nicole was sharing with you, E3G took a look and essentially adjusted a methodology that it has been using since 2018 from a tool called the E3G Public Bank Climate Tracker Matrix And most recently, actually, these tools started initially assessing the multilateral development banks, but more recently we started a collaboration with the IDFC to help give a snapshot to its members about where do they stand in their Paris alignment process. And after, I think, 15 plus banks of all different sizes, of all different shareholding structures, of all different sectors, in all different regions, for us it became increasingly clear something that we already knew from our work before with the MDBs and the bilaterals, and that was that progress on Paris alignment is definitely not evenly distributed, nor should it imply that it's linear across the board. And I think this is really important, and this is one of the things that whenever we engage with the different banks, because we go through this process in which we tell them early on and we express an interest that we would like to conduct these assessments, do it in a collaborative manner, we always emphasize that context matters. And although we have a methodology of 15 metrics that we use to assess how a bank is performing, we also make sure to integrate these contextual considerations, which are, of course, very different across the world. So one of the things that we started noticing is that, of course, different institutions face unique determinants of progress. And these we already had noticed that between some MDBs. For example, we have here the European Investment Bank with us. The European Investment Bank, of course, has a very robust policy framework that underpins its effort through the EU regulatory framework. Other MDBs were perhaps a little bit further away from this, let's say, status or this stage in their Paris alignment process. So we already had, let's say, some understanding that, of course, this was the case. But once we started working with the IDFC members, and here we have some members of some of those banks that we have been engaging with in previous months, it became increasingly clear that these differences were even more pronounced when you compared MDBs to NDBs. So with that in mind, we partnered up with CPI and we decided to essentially take our methodology that we had been using for the last 5 years, and we created a synthesized or abbreviated version of it, essentially taking out of the 15 metrics, only 6 that we thought, based on our experience, were foundational. And also to have a better understanding and to have a grasp of these perhaps regional differences, we took a look at different institutions, mainly focused in banks that were located in emerging markets and developing economies, to try to understand whether we could also pinpoint some specific differences based on the region. Frank, I saw you arrived. If you want to join us, one of our panelists is now here. Please feel free. So with this in mind, we took banks from the Latin American Caribbean region, from Africa, and from Asia, with the idea of trying to understand how this was. And also we took a look and we were careful about choosing different sizes of banks, different constellations and whatnot. So as I was just mentioning, E3G has been doing this Paris alignment assessment work for the last 5 years, and we have these 15 metrics that I will not bore you with, but I invite you to take a look at them at our website. But for this specific task, we decided that because some of the banks that we were going to be assessing were smaller, they perhaps had less capacities, or they were at a nascent stage in their Paris alignment process, it was worthwhile perhaps to not do a full-fledged assessment as we have done in the past for multilateral development banks, but rather really extract those 6 metrics that we believed, or 5 metrics, sorry, that we believed were foundational. And we focused specifically on direct finance. So how were the funds being channeled directly to end beneficiaries for climate action? Indirect finance, so essentially the on-lending to intermediary lenders, the institutional strategy and governance, to what extent these banks were actually integrated climate change considerations in their strategic documents, adaptation and resilience, to what extent these banks were actually screening for climate risk, integrated resilient measures in their assessments when they were evaluating any potential new operation, and of course, to what extent they were increasing adaptation finance or not. And then finally, energy policy, so to what extent these banks had standalone energy policies, but also exclusion lists. So here you can see some of our findings. This is a very synthesized table, so I invite you to take a look at our assessment. But some of the findings that we arrived at. So for example, indirect finance, specifically, we realized that for the MDBs that we had sampled, it was common for them to have climate finance targets, as well as common accounting principles, so the ones that were agreed under the joint MDB group. Whereas in the case of the NDCs, it was not always so clear that they would have this target of climate finance, but what we did find out is that NDBs tend to have a linkage or establish a linkage with NDCs of the countries where they're operating. That of course makes sense because they're a policy tool for the government, they're sole shareholder. For indirect finance, what we found out is that the MDBs that we sampled typically extended their environmental and social safeguards and exclusion requirements to cover their intermediary lenders. And they also, in the majority of cases, offer them support to bring them along in this process of Paris alignment, so perhaps through technical assistance, support, and whatnot. In the case of national development banks, we found out that this was also true, that they also typically extended their environmental and social exclusion requirements to cover lending through financial intermediaries. And then for our other three core areas of alignment, so to say, the first one was institutional strategy and governance. So all the multilateral development banks that we assessed, actually, we realized that they had their own standalone climate strategies. Whereas in the case of the MDBs, it was not always clear. So it was not the case that they had all of them a standalone climate strategy, but what we found out is that they included the notion or the linkage to climate change in their strategic document. So it was not mainstream completely. And again, we also found a very strong relationship with the NDC, so always anchoring them back to the NDC of the country where they're operating. For adaptation and resilience, we also saw in the case of multilateral development banks that there was a tendency for these banks to set their own standalone adaptation finance target. Whereas in the case of the national development banks that we sampled, what we realized is that this was always done in connection to the national determined contribution or the long-term strategy for that case. Finally, for energy policy, we found out that all of the MDBs that we sampled had a standalone energy sector policy as well as fossil fuel exclusion, whereas in the case of the national development banks, that was not always the case, but what we found out is that in the case of those countries that have had any sort of a scheme like a JETP, a country platform, as it was the case of South Africa, these national development banks, and of course PDSMI, they were involved in these efforts, so there was also a connection there. Yeah, so with all of this in mind, and I realized that I actually didn't mention the institutions that we sampled, but you can see them all, and there are quite a few, but we took a look, for example, in Africa, the African Development Bank, at BOAD, we look at the BSA, in Latin America, we look at CAF, we look at IDB, and in Asia, we look at PTSMI and AIIB, if I'm not mistaken. So you can take a look at all of these case studies in detail in our report. But I think, so the big question here is, what are those, let's say, common patterns that we actually found out through all of this analytical work? Because that was what was driving. When we started this process, CPI and E3G, we were thinking, okay, is there something that you could derive from these common barriers that can help you, if the banks tackle them, to increase climate finance on lending and accelerate or help with climate mainstreaming efforts? So the first thing that we found out is that political economy and governance were two key determinants in the process that were either enabling or hindering these national development banks and multilateral development banks in their efforts to increase climate on lending and climate mainstream. So one of the things that we think, and it's one of our recommendations in order to strengthen this process, is that these MDBs optimize their operating model to include also climate considerations, and same for the national development banks, so that these are not isolated efforts, but rather these are mainstreamed across the whole organization, across the whole bank. And this will, of course, will enable them to have better clarity of the different mandates of these institutions, right? Because one of the things that we have found out during our research is that sometimes perhaps the MDBs were not aware of the mandate of the National Development Bank and how that related to their climate efforts and vice versa. And although it seems a little bit, it didn't seem obvious to me for bank officials that are dealing on a day-to-day basis with a lot of information, I think this kind of information asymmetries can hinder those relationships. The other thing that we also found out was that MDBs and NDBs should share their institutional capacity and expertise. The joint MDB group has been doing a lot of work, as has the IDFC group, in order to help with these mainstreaming efforts. It is not a given, it is not a process that is already finalized, and there's a lot to gain in order to share some of those lessons learned and success factors through constant exchange in order to bring other members that perhaps, or other banks that have less capacities and don't have such a big analytical staff group. Yes. So with that, I think here we have, I won't really go into the full detail of all of these recommendations, but essentially what I would like to leave you with is that we identified, let's say, these 3 axes where we believe there are common barriers that could be tackled. So the first bucket being political economy and governance, the second one related to mandates, and the third one related to institutional capacity and expertise. So here, like I just mentioned, there's a few of these headline recommendations. You can look at them, all of them, in our reports. But I think today, what would we really appreciate, and the reason why we are very grateful to have you all here, is to have a conversation and to essentially ask you, the practitioners, whether our findings do reflect your experience. We do not claim, as Nicole was saying, that this is a perfectly comprehensive sample. We know that it is, for that we would have needed more data, but we hope that this can be the foundational, let's say, or the beginning of a conversation where we can hopefully support you in this process. So with that, I would like to then give a warm welcome to our panelists. Today here with us we have Isabel from the Inter-American Bank of Development. Isabel is based in Washington, and she was sharing with us that she has had a lot of experience with National Development Bank on lending. We also have Cinzia from the European Investment Bank, who's an adaptation finance expert, and as we know, adaptation remains one of the most difficult, let's say, flows between MDBs and NDBs. We have also Shilasini from the Development Bank of South Africa, who is just recently joined, and she also will share some of the experience that the DBSA has been doing in terms of changing its governance in order to tackle climate change. We also have Frank Moglio from the West African Development Bank, who will also share with us how that process has been going, especially because in the case of Frank, this BOAD is this sub-regional MDB, no? It somehow falls in between categories, which is why we are very grateful to have him here. And finally, we have Mr. Gangan from the PTSMI. Yes, so with that, I will now pass on to my new role, which is not presenter, but rather moderator, to kickstart the discussion with you. And the first thing that we would like to ask you, and please feel free, any of you, to answer, is what has been your experience with this process at a regional level? Do you feel broadly that what we have been sharing with you reflects your experience? What are your recommendations? So, yes, now it's a matter of who wants to break the ice.
Ladies first.
Okay.
Does it work? Yes. All right, so I'm going to kick off the conversation. Maybe I'll be quick. So thank you for the invitation first, and thank you for the report, which I think it's, as you say, a beginning of the conversation, and we need more of this, right? So I work for the Inter-American Development Bank. We are a regional development bank for Latin America and the Caribbean. And I spent 10 years in what we call the Capital Market Division, which is actually the division that works with national development banks. Latin America has a big networks of national development banks. I think we have more than, close to 100, I think. I've worked with 20, I think. And through the 10 years, we've gone, our relationship with national development banks have evolved a lot, right? At the beginning, we were doing only technical assistance and loan operation, and then we started to do guarantees. We started in renewable energy only, and then we went into agriculture, productivity, a lot of different sectors. So it's not really that, it's a partnership, right? We move together and in parallel, and we work together. And on Paris alignment, we are really trying to tackle this issue together, right? I think the relationship with NDBs and MDBs, as you said, there is this call for the international financial architecture to work as a system, right? And so I think this is exactly what we need to tackle, is what is the role of each of us, and how can we make the best use of our very scarce resources, right? And so I think that what we've been trying to do at the IDB is move from a, I would say, more traditional relationship with NDBs where we provide technical assistance and loans to something where we try to leverage. So we try to guarantee so that they can create space in the balance sheet to leverage their own lending capacity. And we also, on the climate finance side, we are trying to find ways to incentivize or to develop or to focus on climate finance. So the last bit is really important. How do we make sure that a bigger and bigger part of what we do with NDBs goes to climate finance? As you said, it's not always their mandate or their priority, because they have their country's mandate, right? And so what is our role there? Should we completely focus? Should we try to work with them on Paris alignment? How do we do that? At the IDB, we try to find efficient way to incentivize. So for example, obviously you have the loan, which is only climate finance, but what we try to do now is any loan we give to a national development bank must have at least 30 or 40% of green activities, okay? So if we go to the agricultural sector, it may not all be climate finance, but at least 40% needs to be climate finance. So we've tried to do that more and more. The last thing, so always trying to find ways to incentivize the financial sector in a country to go towards more of climate finance. We are starting quite an interesting program with Germany, who gave us through the EKI program. They gave us a new contribution to start a Paris alignment program for national development banks. And what we're going to do is obviously a lot of technical assistance, because we need to work together towards Paris alignment. It's not that easy. But also an incentivization mechanism. It's like a sustainability-linked financing now, where I give a loan to an NDB at a rate which is lower than my usual rate if the NDB commits to some Paris alignment indicators and targets. So this is what I wanted to say. I think we need to work together to increase the climate finance in those portfolios. And there are very different ways to do it, very different ideas, and I'm happy to hear what my colleagues can bring me on.
Okay, thank you very much for inviting me, and also for the wonderful presentation. I think you guys did a great work. It is quite nice to see this sort of analysis and reviews of our approach into climate mainstreaming and climate finance mobilization and the common challenges that we all, have. And I think that is one of the reasons why the IDFC has been created, and it's also one of the reasons why the climate facility and the climate working group within the IDFC also is there. And one of the things you did ask in your report, one of the things that perhaps needed to be pointed out, that's that I've seen FIX and working groups, but I've not seen IDFC working groups. So perhaps you need to update that. Because, coming back to the subject at BOD, so yes, the West African Development Bank it covers about eight countries in West Africa, and out of the 8 countries currently, we have 3 that are under sort of watch because of the various coups that have been happening in those countries. So one of the challenges that we face is also the political stabilities of some of these states. Prior to talking about development projects, there must be security, there must be stability. And so that's one of the challenges that we are facing currently, and to say the least, it's been a huge impact on our portfolios, on our pipeline, the projects that we've identified, and things that we want to do with them. Nonetheless, we continue to develop projects, and one of the things we've done this year was to get our board to approve our climate mainstreaming approach. And climate mainstreaming approach, this would kickstart officially from January 2024. And through that as well, we've also launched a project preparation fund facility. And the idea behind it is to ensure that all the projects we are financing currently must be climate mainstreamed, and also to facilitate countries and project promoters, have some sort of facility to actually develop their project at an early stage. The other factors that you must also consider is that it is true that we've gotten, for example, a line with the GCF, for example, is to do with the private sector, and it's a promotion of, for example, renewable energy on the solar energy, and this was about 133 or 134 million US dollars, but that line hasn't been touched, and one of the issues that we've had as well with that is because the private sector itself, and the line was dedicated for the private sector, and the private sector itself coming to us, the challenge was, one, no project preparation fund, two, what do we call climate mainstream, and what they must consider as climate mainstream, and what are the additional costs to it, and who is covering that, and all those challenges around that has been the reason why that facility really hasn't gone far. So we are looking at a way of restructuring that with the GCF to facilitate this approach. I think the DBSC also has a line like that. I think we've discussed that in the past, and try to think how best we can restructure that with the GCF. When it comes to political analysis and the different policies that our countries have, as you know, yes, they are all signatories to the Paris Agreement and everything. They all have their NDCs, they all have their projects that they want to do. Nonetheless, we are faced with a huge challenge when it comes to the type of projects that we receive. Some are quality-based, some are not. Whilst we try to, align ourselves as a BOAD, we must also understand that we only function with these countries. So it's partly, let's say 75% public sector and 25% private sector. And we are trying to get it to be some sort of 50-50 approach where the private sector has more to do, in these things than the public sector. But it is a fact that it hasn't been an easy approach at all. We've barely started, or we are barely about to start today, climate mainstreaming internally. And as you know, we've also engaged ourselves with the study that you are carrying out to make sure that we analyze exactly how well we are aligned when it comes to the Paris Agreement and what can be done to improve that. So we are at early stage, but I needed to list out all these challenges that we are facing and to tell you exactly why this has taken time, and the solutions at hand that we have currently to make sure that from January onwards, we are better aligned and we are better positioned to do that. Thank you very much.
Thank you. Good afternoon. I'm Cinzia Loseno. I'm from the European Investment Bank. My focus in the bank is very much adaptation finance policy. So you're not getting really the right person to talk in this panel, so apologies for that. But I'll do my best to represent my operational colleagues that really work with NDBs all across the world on climate finance and all sorts of other development objectives. So apologies for that, but I'll try my best. I really like this study, and I really wanted to convey my thanks to E3G and CPI for carrying out this research, because I really think that national development banks, national promotional banks have a key role to play in delivering climate objectives, and they're not often, or they don't get the prominence, the relevance that they really should get. For us, it's a no-brainer. They are key partners in developing climate and broader development objectives, not just in the global south, but I would say globally. So we have the same approach in the EU. The European Investment Bank is the bank of the European Union. So we work across the 27 member states of the European Union, as well as in Africa region, Latin America, and the Caribbean, the Asia and Pacific region as well. So we have EU operation as well as international operations. And across all our countries of operations, we do work with national development banks. And it's an obvious reason why they are key partners, because banks like EIB or maybe Inter-American Development Bank and other multilateral development banks, we are very large institutions with high transaction costs, and we cannot reach to communities. We need to work with banks on the ground to really reach out to small partners, small and medium enterprises, and all types of public and private sectors that have no capacity to reach out to large multilateral development banks. So there we go. NDBs are key partners for us to be able to reach out to smaller types of clients, smaller in terms of really scale, but that partnership allows us to have a very large impact on the ground. I liked your study because you pointed out to a few key features that we certainly share in terms of our experience of working with national development banks, again, in the EU and outside the EU, interestingly. And one is to do with capacity. Absolutely. What we have seen, certainly, and again, I hope to make justice to my operational colleagues, is an enormous increase in capacity of national development banks when it comes to discuss climate change. This is really an extremely interesting development, and one that we certainly have banked on. We do work with a number of national development banks to really build their capacity, understand what climate objectives are, but not just about climate finance, but what we call Paris-aligned finance. So ensuring that also all the other finance that doesn't have a climate objective does not undermine the objectives of the Paris Agreement, being mitigation or adaptation. And we have worked with a number of NDBs to really help them, for example, develop a strategy, develop the processes and systems to maybe track carbon in their operations or track fiscal climate risks in their operation, and so on and so forth. I can give you an example of a development bank on a West African country who by accident is sitting next to me, where we have in fact increased our equity. And through that deal, we also supported that particular bank in the GCF re-accreditation process, the development of a climate change approach and strategy, the development of carbon footprinting methodologies, development of climate risk assessment systems, and more generally, we will support them in Paris alignment by 2030. So through that partnership, we hope to help and work with this particular development bank of this particular West African country in really support their journey towards Paris alignment. Thank you.
Thank you so much.
Thank you. I have this. Thank you. First of all, thank you very much for having PDSMI in this panel. And SMI is a state-owned enterprise in Indonesia, owned 100% by the government. By our national law, SMI is not the National Development Bank, but we are a national financial institution that has mandate to accelerate infrastructure development in our country. We can provide financing facilities to local government, private sector, private entities, as well as state-owned enterprises. And we have been collaborating with MDBs since we can be considered as intermediary in this context. We developed a cooperation with the World Bank, ADB, IFD, and we are under discussion with the IB to have financing facilities. As national financial institution, we conduct the transaction at project level. So I think it is very, very important since discussions within MDBs and NDBs is more on funding side, how to secure funding, how to mobilize various funding sources in order to provide financing support to project level. But based on our experience, we face difficulties and complexity in transaction phase. So that's one thing that I think it can be the next step of the study. I think thank you for the study. The study is very, very insightful and providing us with a figure of how MDBs and NDBs have been cooperating so far. But one thing that I think it can be useful for us at least to provide information and also what is the complexity and the problem at project transaction level. So I think that's one thing. The second thing is how to invite the commercial bank, because I do believe that this climate action should also be supported by private entities, by commercial banks. So I think how NDBs and NDB's role and cooperation role to invite more commercial bank to participate. We have established one platform, the so-called SDG Indonesia One platform, and we are just appointed by the government to be the manager of ETM country platform in Indonesia. So we manage two platforms, funding platform. Based on our experience, through that platform, we can mobilize various funding sources with also different financing instruments. So with that, we can establish or develop various innovative financing scheme that involve several financing instruments. For example, I can give some example that in one geothermal projects in Indonesia, we mobilize the concessional loan from one development banks in other countries, combined with our commercial loan, and also supported by technical assistance from the international organization, in this case, GGI. So I think it's a good example that through one platform, we can develop blended finance facilities to allow the project happen on the ground. I stop here. Thank you.
Thank you so much.
Okay, I think it's my cue to take over. So I think I like the point about private sector, because at the end of the day, public banks are not the same as commercial banks. I did have the experience, I think many of us probably did, in working with or for commercial banks and public banks. And so it's a very interesting space to be in the context of what we're trying to achieve globally. And I think the one thing we shouldn't be amiss of is, whilst we're not the same, we're trying to achieve the same objectives. So consistency for me is fundamentally important. You know, and in saying that, I'll just go straight into the fact that, you know, at the DBSA, yes, I've started fairly new, but in terms of where we want to go, it is absolutely crucial for us to align to international precedent on reporting. And, you know, obviously the study illustrated exactly that. I think as part of your methodology, which was very desktop based, you probably noted that reporting is an issue. And you might not encounter that so much with the multi-development banks. However, it is problematic for public banks as a general. And so the quicker we move towards that type of reporting, the faster we can tell our story. Otherwise, and I made this comment earlier, the story will be told for us. And we don't need that, especially in an emerging market context where we are straddling the triple bottom line always. And so social imperatives become equally important. Human rights issues equally important to biodiversity, to climate risk. So in the context in which we operate, social does take a very strong stance. But coming back to the climate risk side, at the DBSA, we most certainly have understood that, you know, we're going to have to start increasing our reporting. So in terms of the 4, you know, TCFD recommendations, we have made quite a bit of movement. Well, it's slow and it's fast at the same time, in the sense that it is quite new. There are operational issues that we are dealing with. Forget about the external. The external environment obviously is there. It's not going to change. The demands are there on us for reporting and consistency. And so therefore it turns the operational issues on its head. So internally the organization is not potentially or usually geared to the likes of responding to these types of frameworks. And so on that basis, you starting from the right at the basics, get your governance right, get your risk right, get your systems geared, and everything else will fall into place. Because, and I think this was a comment on another panel I was recently attending, the money is there, but the fundamentals in place are not there and to allow for that facilitated, catalytic, scalable finance you're looking for. So that is what I believe, you know, as a PDB, what we should be trying to align to ensure that acceleration. So in terms of that, that is what we've started attending to. We've also started looking at metrics, targets, re-looking and revising our energy policy, re-looking at, you know, what social dynamics and context means to us, looking at climate finance internally, other types of innovative instruments, not just relying on concessional finance, but actually looking a lot more broader across the balance sheet. So that type of discussion is only now starting to happen because traditionally you tend to look at your traditional credit risk models, credit risk pricing. It's not what we're talking about here. So that is new to PDBs. And what we're trying to do now is actually you're starting with the education around, do you understand? We would need to find the headroom on the balance sheet to be able to scale up this type of, when you talk transition finance, what is transition finance? You needed to do the risk capital work on your balance sheet. You cannot rely solely on concessional finance. You need blended finance. So then you're going to the basics of explaining what is a climate finance facility, what is a sustainability linked loan, what does it do, how does it move, how does it act, how doesn't it act? Because if we don't have that discussion, you don't understand appetite, you don't understand the relevant stakeholders, and you're not going to get the money. So on that basis, the consistency for me, absolutely imperative. I think it's time for us to, yes, we're different, but we are moving towards a common objective here. And that is, Paris alignment, ensuring that we reach net zero and so forth. I think I'll end on that note.
Thank you so much, all of you, for sharing all your great insights. I'm happy to see that some of our recommendations actually do come up in your comments. For example, the need for greater standardization, but in our case, we were looking at it from the approval process of the Multilateral Development Bank to reduce transaction costs. Now from DVSA, I'm hearing that it's also about the reporting, which of course makes a lot of sense. We've also now been discussing the need for support for developing those pipelines. Frank was sharing that, of course, there's always the argument that public development banks are demand-driven. And if that demand is not there, even if there are good intentions, there's not that much that can be done. We're also discussing other different instruments that can be used, no? So, and the development of those instruments and the deployment of those instruments is not a straightforward affair. So, for example, the IDB has the green bond framework or transparency platform, if I'm not mistaken, that's the correct, and that is of course an exercise that enables that transfer of knowledge. And here I think one of the things that I would like to emphasize is one of our recommendations. I think Nicole and myself personally, but also E3G and CPR are very big fans of Finance in Common, the coalition of banks, because that's a forum where we believe that there's a lot of exchange happening. Many of us were in Cartagena this year, and I think that's a testament. PTSMI was there, DVSA was there, although the African Climate Summit was happening at the same time, so it was really great to see you there. But I also now want to turn to the positive sides. We've been discussing what are the issues, what are the hindrances. Mr. Gangan from PTSMI was sharing, for example, this facility as an example of how this can work. So I would like now to pick your brain a little bit about those initiatives, those models, schemes that you see have some potential, so that hopefully we can highlight those and they become a mainstream practice, or maybe mainstream schemes and not just isolated in a specific context. So with that, maybe, I don't know, should we go then the other way around, or how should we do this? Should we start again with Isabel then? I think there's a microphone. Yeah, exactly.
I mean, as you can see, the relationship between MDBs and MDBs is extremely wide and extremely complex at the end, because you can do big infrastructure projects. And so the question is going to be local currency, it's going to be hedge, it's going to be credit enhancement, And then we can also do MDBs to NDBs to do very small adaptation in agriculture. And so you're talking like very, very, very little projects. So we have to tackle a relationship between MDBs and NDBs for this huge umbrella and this huge scope of projects. In terms of, I think that the most important, given the international financial architecture that we are trying to revamp, I think my main message is we should look at this as a system. So what is the role of each? So you were saying, the role of the MDB, the role of the private sector, the role of the NDB, the role of the climate funds. We need to try to find a way not to overlap, and that each come with his own role. And I think on our side, what we're trying to do more and more is use grantees as a way, as an instrument on our side, and we're actually working with the EIB recently in Barbados. Instead of coming with just our normal loan, you can come with a guarantee that creates space in the NDB balance sheets to increase the lending capacity. That's one of the way we could, rearrange things to make better use of the resources. The technical assistance, and this is a message I'd like to pass on also, is at COP we all talk about big numbers and resource mobilization, et cetera. You can go a long way with technical assistance. And on the green bond transparency platform, the green bond technical assistance program in general, I've seen that myself. So if you start talking to an NDB, I had the case with FIRA in Mexico. It's an agricultural public bank, right? And they had this huge portfolio of protected agriculture. So basically, they help farmers in Mexico to grow fruits and vegetables in greenhouses, right? And the idea was how do you make this sustainable, right? And these people are really technical, and they knew they had all the indicators, all the monitoring and evaluation to prove that there were climate benefits to actually grow things like this. So we went with them. We talked to Climate Bond Initiative, which is, as you know, the standard arm of the green bond market, and we developed a standard just for that kind of agriculture. And then they could issue a green bond and bring private investors into their capital. So, and that cost us, I don't know, I can't remember, but very little money, because it's a studies, then it's a framework for the green bond, and then it's a second-party opinion for the green bond issuance. So with a very little amount of technical assistance, you can actually mobilize a lot of resources. And it's our role as MDBs also to channel this expertise and this technical assistance to get to greater number. So yeah, that would be my message, right? Let's try to have each our role and go together.
Excuse me. Thank you very much. I think for me, what I can share really with the relationship between us and, for example, national development banks is that we still don't have a perfect instrument that would totally soften or smoothen the process, working from our mandate to national development banks. I mean, national development banks can definitely come to us, but it is the same approach as anyone else. So they are not treated differently than anybody else coming for a project at BOAD. And I think there is a need for proper instruments that would not only impact the national banks and their approach of doing climate finance and climate projects, but also for us to also share our own experience with them and all that. Now, I don't know, we didn't fix how many African national development banks are part of that. I don't know the figure in my head, but I do know there are quite a few. And I can definitely say that this is something that we are working on and we are going to achieve. I was, whilst my colleague was talking about their own experience and the innovative instruments that could work, I was also thinking of a project that we did with the National Bank of Agriculture in Niger, Bagri, and it's an adaptation fund, funding for a climate smart agricultural project, and BOAD gave some sort of grants. It wasn't a loan, and the adaptation fund was a grant as well, and the National Development Bank was supposed to bring in their own share. I think the project was approved in 2016. I don't think we've achieved 60% of that project yet in terms of implementation. And now comes in the insecurity issues again in Niger. So it is quite a challenge, at various levels for us. But this is to say that I think the need for the study we are doing currently is very important. The collaboration between us and sharing our own experience is important. And there are new challenges that are arising every day that we weren't prepared for, that we need to be prepared for. So I think that's just my take on the issue. Thank you.
Thank you so much.
Thank you. I'm not quite sure I can add much to what my colleague from IDB has already pointed out. I think one point I will make is that national development banks, while of course are one big ecosystem, are very, very different in nature, mandate, capacity, and we see a huge variety, particularly in terms of their ability to take into account climate objectives in their own lending and really articulate what that means in terms of sub-projects and with their client base. We do see a massive variety of in terms of capacity. What perhaps we as MDBs need to think about is a bit more of a targeted approach according to where we operate. And of course, we all have different strengths, and we can add different types of value in our partnerships with national development banks. But I would say we tend to, certainly in the EIB, we tend to have a very one-on-one approach to, really build the capacity of that particular national development bank. So really is a very diverse ecosystem of institutions, and we need to be wary of that. Thank you.
Thank you. For me, I think MDBs should increase the flexibility when we develop and when the MDBs develop cooperation with national banks, since each country has its own challenges, its own ecosystem. Example, we have been cooperating with MDBs that I mentioned earlier. First, we work with World Bank, for example. So we developed the one for environmental and social safeguard. We developed one framework. Okay. Then ADB came, and ADB requests the similar framework, but it's World Bank. ADB is different. ADB is different. EIB, then also evaluating the framework. So to some, it's good to ensure the credibility, but on the other hand, for us, it's a bit headache. So I think that's one flexibility. I think there should be one common understanding on the standard that can be accepted by MDBs to build cooperation with national bank. The other things that I think need to be considered is how MDBs and NDBs products can be accepted by the market. Example, SMI has a financing facility for supporting geothermal exploration activities in Indonesia, together with the World Bank using GCF funding. We provide facility, the so-called loan convertible to grant. So we provide loan to private developers or to SOE to do the exploration drilling. So when it is successful, the borrower should pay the repayment to SMI. But if unsuccessful, some portion of the loan can be forgiven and can be converted to grant, 20% to 50%. In the beginning, the assumption is, oh, it's very, very good instrument. So we expect that a lot of private sectors will be interested to come to us and to use this facility. But in the end, after 3 years, it's zero. Zero projects can be financed to this. So I think now we are evaluating what's wrong with this program. So I think, that's some example that we need to create facility that can be accepted by the market in order to conduct the climate projects on the ground. Thank you.
Okay, so I think on our side, and I'm so tempted because some of my colleagues are here on the climate finance side, and they would be able to talk better on this. But obviously, through the fact that we have Jeff, GCF facilities and accreditation, our mandate extends now into the wider, African continent. And so on that basis, there's a lot more opportunities for us in that we see ourselves playing a much bigger role in trying to originate and kind of catalyze this investment into, just beyond our Southern African region. And then, I want to also just mention, obviously, we see many opportunities through our project preparation facilities. We're currently having discussions around the same. So in terms of investments, or how do you bring sustainability in design in all of the projects you actually do, understanding the limitations and the leverage points that we have. But project prep facilities obviously give you that type of ability to do so. We obviously participate in master planning and so forth. So potentially there is a wider role we could play in trying to unlock that more. And then obviously concessional finance, grant, and blended finance type instruments would come into play. But also, again, going back to the point, we're starting to try to unlock that across our balance sheet, taking a portfolio kind of view potentially and so forth, unlocking that opportunity. And then I also want to just mention, again, coming back to our just transition strategy, obviously that being very top of mind for us, understanding where our priorities are in terms of alignment to the NDCs. And so we can't move very far away from that, but also then trying to leverage off any opportunities we've already initiated. So we've got something called the D Labs, and so that is something that worked for us. We very much are leveraging and hoping that we can, push it forward as a skills transfer unit for certain strategic priority areas in South Africa. So from an economic diversification of coal, as we start moving away from coal and disinvestment, and then some of these towns potentially being stranded as a result of jobs just being centered around those particular industries. D Labs is something that we would be looking at and trying to leverage off in terms of trying to scale up and pull our partners in to try to facilitate the skills transfer and so forth required to move from a fossil fuel heavy economy into a greener kind of economy. Thank you.
Thank you so much. And I think one of the common denominator in all of your comments that I think keeps coming up, it's essentially rooted in collaboration, no? On the one hand, Cinzia was mentioning the fact that we need to be wary of having one-size-fits-all solutions, that we need to preserve the context-specific understanding. At the same time, it is true that this is a whole of economy, whole of society transformation, and we don't have so much time, so how do we strike that balance? And I think here I will make, because very nicely you suggested a follow-up for our work, which we will be very happy to discuss with all of you, and all ideas are welcome. But I think one of the things that I'm personally very excited that I've seen this COP is that these calls for reform are starting to materialize. They're still not perfectly tangible, but I am very, very hopeful in this joint MDB country platform approach and the role that national development banks, bilateral development banks can play in there. I'm already chasing IDFC and IFD in order to start having this full understanding, because at the end of the day, as you rightfully said, we have, on the one hand, Isabel, the projects that are very, very large, but we also have these very, very tiny projects. At the same time, we have to be mindful of transaction costs. So how do we actually optimize all of those exchanges? Thank you so much. I would like now to give the word to Nicole to summarize a little bit and give our final remarks. But we really appreciate you engaging throughout this process. We saw some of you in our breakfast in Cartagena. You responded to our consultation. So thank you for making this possible. And yeah, over to you, Nicole.
Great, thank you to Laura and our wonderful panelists. So it seems like our conversation today really focused on the need to balance both standardization and flexibility. How do we standardize these processes and reporting frameworks to create a greater understanding and more shared understanding between multilateral development banks and national development banks? And I've spoken with several of you about how the data between these, we scraped through each individual MDB's project portals with a series of keywords and an artificial intelligence system to try to collect this data, and just that, how much better and easier would this have been if there was a collective repository of all of that information with clear recipients and climate impacts involved. So I certainly think that, on the data and the shared knowledge side, there's really opportunity for greater standardization. But at the same time, also really needing to be aware of the each and unique individual circumstances that each of the national development banks is coming from, both in terms of their mandates, in terms of their political context, economic context. We've talked about the just transition today. The JET-P platforms are obviously a huge deal, including also the attachment to the NDCs, as you mentioned. They vary wildly. It's naturally going to impact what that relationship looks like between the MDBs and NDBs. So I think trying to strike a balance there, which certainly is not easy, perhaps a question for future research. But as well, how do you look at the project level processes? One of the things that we definitely are aware of is the difficulty that comes from any financing agreement and arrangement, just this difficulty in standardization, the difficulty, we've heard from some people that if they want a blended finance agreement, they have to hope that they get the right person on the phone. And it's a lot more difficult in terms of that. Or coming from the MDB perspective, how do you create a process that's a little bit more off the shelf? That's not easy, especially since I've just said you need to take into account these external, contexts that need to be unique and individualized. I also think, one of the really interesting things that came from this conversation is we looked at this MDB to NDB relationship, and apologies for the acronyms that sound the same throughout this whole conversation. But how do you expand that and bring in perhaps national governments with their NDC processes? How do you bring in that private commercial sector? How do you expand this question of where this money is coming from, where it's going to, and how it's being used, all the way to its endpoint? And I think one of the original questions we had when we started this research is, if an MDB wants to have a certain amount of climate financing, how do they ensure that the money is actually at the very endpoint going to that? And I know that that's an increasing and continuing difficulty for everyone involved. So certainly that, but it's also ways to bring in innovative finance, ways to use that capital mobilization, ways to use a little bit of money through technical assistance to bring in a lot of money. And I think that that's really just sort of the crux of the question on climate finance. How do you provide this additionality from public finance in order to leverage as much as you can from the private sector? So certainly not an easy question, one that I think has probably been brought up for years now, but certainly one that I think, we have, I believe, just a huge increase in the number of private sector participants at COP this year. I know there's been a lot more interest. Climate finance itself is becoming mainstreaming. People are even saying that you don't need public finance in renewable energy, which is an entirely different argument. I will not start that here. But, what is the role of public finance really is kind of the crux and behind a lot of this. So I just want to thank all of our panelists for their really thoughtful answers and questions to us. I think there's a lot of areas for potential future research in this area, especially on this relationship, this collaboration that Laura mentioned, ways to really optimize that and bring that to the forefront as much as possible. So thank you to our panelists and thank you to our audience. Thank you.
and beyond. What is IDFC? The International Development Finance Club